Hi, my name's Joe Guinan. I'm here with Maurice Farhart from the Australian Exchange. He's up from down under, and he's joining us today to talk a little bit about our markets and their markets. Thank you for joining us.
Lovely to be here.
I was wondering if you could start off by giving me a little information of how did you land in the market working for the Australian Stock Exchange? How did that come to pass?
Well, really, it was straight out of university that I have completed my honours degree in business finance and joined a very small bank back then in Australia called the Commercial Banking Company of Sydney that was swallowed by what's now the National Australia Bank, one of the big four banks, and started as a graduate on their treasury desk, and over the years worked into doing some trading in fixed income, traded for myself a little, and then joined the exchange initially as their treasurer, investing their initial margin money, and then moved into business development, product development, and eventually into international sales. So I've been with the exchange for on and off for 13 years. So I had a 3-year break in the middle there where I traded some of my own money, trading US markets and Aussie markets. But yeah, over 13 years with the exchange, and now looking after international sales, offices in Chicago, London, and in Hong Kong, and doing a little bit of travel, and happy to be in Chicago this week for the FIA.
Yeah, a little bit of travel. Everything's far from Australia. So you're here now, and did I hear you're off to London next?
London next week, and last week we're in China and China and Hong Kong. So a little bit of travel in the last few weeks. Yeah.
A lot of travel. Huh?
Yeah.
You've seen a lot of transformations during your time at ASX. What are some of the biggest transformations you've witnessed?
I guess in the early days, ASX and SFE, really, the Sydney Futures Exchange, merged with the Stock Exchange in 2006. So if I look back at the SFE days, Australia's always been a follower in terms of following the US rates. And of course, the US market's open when our market is traditionally closed because we're in different time zones. So very early on in the early 1990s, whilst we were open outcry on the floor, we also had a night electronic session. And in 1999, amongst a lot of concern from local traders, we decided to go fully electronic. So I think that was the first really big transformation, going in November 99 from having a very successful floor operation to going fully electronic, and being able to manage the fears that some of the local traders had, the fears that some of the end users had in terms of being able to access liquidity, I think was really interesting. So yeah, I'd say the biggest move and the biggest thing for change was electronic trading. I think looking now at where we are, I think the big changes with OTC markets and OTC clearing, and the amount of trading that's happening in the OTC markets generally. I think the future style and the proprietary style traders in Australia to this point haven't really had much access to that market. I think in time that will be the next big change, where proprietary trading groups will also have access to the cash markets and be able to trade more in that market.
How about the consolidation in the industry, both on the FCM side and on the exchange side? How much has that impacted things in Australia?
I think in Australia the consolidation was more that the futures exchange and the stock exchange merged back in 2006, and it's had positive effects for the market, because we've been able to give economies of scale to end users, and that'll continue. I think from the FCM perspective, our markets have been. They're not as big as the US markets, obviously, in terms of turnover. I think we punch well above our weight overall, but the reality is we're not that big. So we probably don't have as many FCMs in Australia and as broad a number of FCMs in Australia as you have in the US and Europe. But I guess what has happened is it's been there have been savings to the end customers in terms of their clearing costs. I remember as a trader paying well over $1.50 to have my institutional business cleared back in the 1990s, and I'm sure for the numbers we were doing then, the cost of trading now is much lower in that respect.
What are the hot markets, or what prospects do you think are good for traders now, particularly in the Australian markets?
The Australian market, because we trade on yield, there's a lot of spreading that occurs. So we trade bills against, so short-term interest rate contracts against 3 years, we trade 3 years against 10 years. But the one that's really been picking up of late is the Australian 10-year note versus the US 10-year note. So there's been a lot of trading in there in what we call the spread, the Aussie US 10-year or Aussie US 10-year spread. And I think that'll continue a lot. So we're seeing interest in our 10-year bond futures contract in particular rise significantly, particularly in our overnight session when the US market is most active, and I think that'll continue. In our region, with Asia as being a dominant trading partner for Australia, there's a lot of commodity business that trades as well. So in the coming year, we'll start to list some commodity products specifically targeted at China, mainland China, and other parts of Asia.
Any advanced word on what some of these products might be, or is that still under wraps?
No, we're working on two in particular. So a deliverable gold contract and a deliverable silver contract. But they'll be deliverable in Australia to the Perth Mint, and we're just working out where the silver will go. But yeah.
Okay, interesting. So, any other products on the horizon that you?
Yeah. So the deliverable swap futures are coming in the first quarter next year as well. It's a little different in Australia from a regulatory perspective. We do not have there's no instruction for banks and end users to have their OTC derivatives cleared, but there's a capital efficiency if you do have them cleared, and we feel that a deliverable swap future would open up the market to some users that don't have credit lines in place to be able to trade credit and swaps. So the deliverable swap future we think will be an interesting new starter into the stables.
On the regulatory side, here in the U.S., we've been under an enormous regulatory microscope the past half a dozen years. Anything similar in Australia, or is the regulatory landscape changing at all?
So we're not dissimilar, but by the same token, I don't know if you would have seen, but the Australian banks did not suffer the same losses as some of the Northern Hemisphere banks faced during the global financial crisis. So our regulator hasn't been as stern on them. So our banks have very strict and always have had very strict qualitative and quantitative controls over what they can do. But having said that, regulation still is a key part of what we do. And we self-regulate our futures market, but then our regulator, ASIC, also oversees the regulation of both our futures markets, and now there are two equity exchanges in Australia. They oversee both the equity exchanges, ourselves, and the rival exchange.
For FCMs such as Advantage and our peers, would you recommend this as a good time to invest in Australia, or does it seem like it's fairly stagnant right now, the FCM space in Australia, or do you think it's going to be growing? Volume will be growing, volume will be shrinking. What do you think?
So volume has increased in our market in the last 3 or 4 years. We're 15% higher this year at this time than we were in 2014. We've actually just onboarded our first remote clearer. So we've always had domestic clearers. We onboarded our first remote clearer from the UK recently, and we are looking at expanding that program to have more offshore and remote clearers to come to our market. We see the benefit of remote clearing as being very much a greater ability for us to distribute our product through parts of the world and clients that we don't have distribution through at the moment. So my answer is a very big yes. We'd really enjoy being able to have a remote clearer from the US one day, and hopefully one day soon.
Yeah, we would like to someday be a remote clearer. So hopefully we can build our volume and be one of those firms.
Yeah.
Another question I'd like to ask people, based on your experience and so on, both at the exchange and in the industry more generally, if you were meeting with a 25-year-old young person nowadays, would you recommend they go into this industry generally, or would you think there's more opportunity in another sphere?
That's a really interesting question. I've actually got a couple of 20-some-year-olds that are not in our industry, but not because I haven't asked them whether they'd be interested in our industry. I guess there are two parts of our industry. There's very much a trader type part of our industry, and there's very much like an intermediary part of our industry. And I guess Advantage, from one perspective, is very much an intermediary for people to trade, and yet you have a number of traders that are trading through Advantage. I'd say for a 20-some-year-old, it's probably a different game now than what it was many years ago in terms of coming in as a new trader. When we started trading many years ago, we were trading against other individuals. In today's day and age, there are a lot more automated type traders, and I think it's probably a little more difficult for them to come into the market in that respect. But having said that, we have a number of proprietary trading groups in Australia that do take on graduates and do train up graduates in traditional point and click style trading. So I think for the ones who've got the street smarts, I think there's still a good opportunity. But I think the beauty of the markets and the diversity of the markets in this day and age is that the computer scientists also have an ability to come to our market and bring some of their knowledge and skills in the automated space. So yeah, I still think we've got an interesting industry, a vibrant industry, and hopefully a continually growing industry.
So aside from trading, both the technology people, point and click, how about if somebody asked you, is going to work for an exchange, generally speaking, a good career path coming out of college? Would you recommend something like that, or maybe not?
Yeah, I mean, there are, again, different parts of the exchange. In terms of business writers, you won't be surprised to know that there are not that many business writers at exchanges in this day and age. The exchange tends to be more around regulatory, operating, regulatory and operational matters. So most of our staff are not business writers, yet we want to write business. So I think there are opportunities, whether it's in compliance, whether it's in finance, whether it's in legal, whether it's in business development. There are always opportunities. And as I say, I still think our industry is an interesting industry and provides opportunities to those who are prepared to work a little harder than in some other markets.
Have any thoughts for the big trades for next year? Is it going to be rising rates, another year of global deflation, commodities ever going to move?
I think the Aussie dollar is going to probably continue to drop a little. So at some stage the US is going to start to move their rates up, although you'd have to think a fair bit of that is priced in now. But I think we may see a slightly lower Australian dollar. The Australian rates are at their all-time low at the moment, at 2% for the cash rate. We had a central bank meeting earlier in the week where the market expected 50-50 either way, whether they'd drop further or not. They didn't drop, which gave a little bit of support for the Aussie dollar. But I think once the US market starts to increase their rates, the Aussie may drop a little further. I think commodities, it's cyclical. And I think China is probably, even at 6.5% growth, is probably having its slower period at the moment. And that will come back into the 7s and the 8s in the coming years. So I think commodity prices will again move up. And when they do, I think the Aussie dollar will move up again with them. But I think, yes, it's probably slightly higher rates. I know you like to see slightly higher rates. Probably slightly higher rates in the near term.
Well, certainly longer term, I think the Australian dollar looks really cheap. When it gets around that 70-cent range, it usually doesn't stay there long. And just a couple of years ago, it was above the U.S. dollar.
That's right. Yeah.
But I agree. The China overhang is much more severe for you guys. Well, thank you very much for joining me here today, and Maurice, I appreciate your insight from Australia. Thank you.
Lovely. Thank you very much.